With the growing interest in Islamic finance products from governments, countries, and investors worldwide, it is of utmost importance that capital markets in the region, which is home to a vast number of Islamic financial institutions and debt instruments, to place more effort on developing this sector and its legislative framework. Our final session today will provide a fresh perspective on the importance of Islamic capital markets and economic development and the oversight role of regulatory authorities and stock exchanges in Islamic financing. I'm glad to give the floor to the moderator of this session, Dr. Sayed Farouk, Global Head of Islamic Capital Markets at Thomson Reuters, and our speakers, Dr. Ubaid Al-Zaabi, Deputy Chief Executive Officer, Securities and Commodities Authority, Mr. Yasser Dahlawi, Chief Executive Officer, Sharia Review Bureau, Mr. Khalid Houladar, Global Head of Islamic Finance Group, Moody's Investors Services, and Mr. Ibrahim Turhan, Chief Executive Officer and Chairman, Bourse Istanbul.
Good afternoon, or shall I say good evening to everyone. I have the privilege and benefit of hosting the Red Eye session, so I'm going to try my best to keep you guys alive and engage with a very distinguished set of panelists. We had a pre-session and it was quite interesting that a lot of the controversy was already sparked there, so hopefully you'll bring some of the controversy into the session here. We have a very interesting set of panelists, but also an interesting context of questions that we'd like to run through. I guess as a context for this, the first thing that we want to address is what is the opportunity set when it comes to Islamic finance, and is it really being tapped as it stands right now? If you look at some of the statistics that are going on about the Islamic markets and the population of Muslims in the world, you know that there is a huge opportunity set that's not being currently tapped. And that's present in the sense of the statistics, for instance, published by the Pew Research Center that say that 87% of the population, the Muslim population, consider religion to be a very important determinant of their decision making, as compared to 30% in Europe and 49% in places like the United States. I'm sure even when you dig into this part of the world, especially the GCC, you think that the religious sensitivity or Sharia sensitivity is much higher here. But we don't see those relative rates of concentration or what you call penetration of Islamic finance as compared to the religious sensitivity. And I guess that's one of the key critical issues that I'd like to address here, and that puts the context in here. And that's where capital markets as an enabler for the flow of capital from these savers who are religiously sensitive to the broader economy has to play a role. However, to deploy these investments, you need to be able to have the right sets of capital market instruments, the ones that suit the needs of all the different types of investors, in accordance with the life stages of those investors. So if you think about youth, employment, house, savings, investment, and right now, what we see in terms of the scope of investors, most of them are into savings because they're mostly emerging from the youth decade or the youth generation. However, what we're noticing is that most of this investment or savings isn't really being deployed into the actual capital markets and into the economic development. Most of it is going into Islamic banks, 85% of the capital in the Islamic finance space, and it is being deployed through Sukuk. And even in Sukuk, we're not being able to capitalize on this demand. So within that context, I want to understand from the panelists is to how can we enable the capital markets to become a more effective system to take all of this capital from savers and depositors and funnel it into economic development in accordance with the beliefs of these investors who are Sharia sensitive. I just want to give opening remarks as to what do you think the role of the capital market should be in the context of Sharia compliant investors and within the context of this untapped demand. Yasser, do you have any opening remarks?
Bismillah ar-Rahman ar-Rahim. To begin with, I believe to have an efficient capital market from where we stand from a Sharia compliance point of view, it is quite important to have proper governance in that sense. And this is one of the issues we're dealing with different clients in different markets, and we've seen a lot of regulations and a lot of markets that doesn't have specific regulations for Sharia compliance business. And in order to achieve more efficiency, we need to see that. I mean, we will, in order to gain the trust of investors and Sharia compliant investors in particular, we need to have more transparency, a clear-cut guidelines for at least a minimum level of standardization. That's what makes things clear. I'm sure there are different examples of cases where investors were confused about a certain IPO or a certain investment, and they seek information. We actually receive a lot of inquiries from retail clients inquiring about a specific investment. And in that sense as well, there is more need for client awareness and education. Because when somebody calls us about a certain investment or certain IPO, they would always want to know if it's compliant or non-compliant. That's it. They don't want to understand why it is compliant or it's not compliant. And sometimes there are different in opinions of looking at things, even from Sharia scholars. And the result of that basically is that we will end up having two or more opinion on the same investment. So I believe client education, customer education would be a good way also of a more efficient capital market.
And do you think it's the role of the regulators and the stock exchanges to be able to enhance or provide enhanced investor education for these market spaces?
Yes, I believe
for Islamic finance.
Yes, absolutely. It's education is required from regulators and fund managers, investment companies. They need to educate their clients not only on what return is they're getting from its investment, but also what are the Sharia guidelines that is managing this kind of investment, and why, and how they can make sure it is being implemented in the right manner. I would also believe that education would lead to change in attitude of clients, because rather than just inquiring about whether it's compliant or not, they should actually inquire about how is it implemented, and they should ask why it is compliant, and maybe read the PPMs and the prospectus of IPOs to understand more about a specific investment.
Great, thank you. I think I want to put the context back into this question, which is you're seeing a lot of this latent demand, and just to put some statistics out there, 72% approximately of the world's Muslim population are unbanked. You see this demand come into the sukuk market, where we project on an annual basis that the demand and supply gap is around 140 billion. And is going to reach around 270 billion by 2018. Taking into account the fact that there's increased supply, increased issuance, etc., but we're not able to capitalize on this demand, or we're seemingly not, because we're not able to supply enough instruments. What do you think, Dr. Ubaid and also Dr. Ibrahim Turhan, what do you think are the roles of the regulators and exchanges in this context? Is it to just facilitate a level playing field with conventional securities? Or is it to actually provide a proactive and dynamic regulatory architecture that facilitates more issuance of Islamic instruments and securities?
Thank you very much, Chair. I think, talk about, the holistic approach of, the developments of Islamic finance in a way of, develop the Islamic financial capital. I think the rules should be, the developments responsibility should be lie on both the regulator, the financial markets, and the Islamic financial service providers as well. From the front of the regulator should pave, the way in a way of, improving or developing, the regulatory framework. We have a problem. I could, take a Sukuk as an example. Sukuk suffer from, the lack of regulations of, trust, bankruptcy,
Transparency.
yeah, etc. So regulator should, be more proactive in a way of, complete the regime of regulatory framework. Financial markets also has to complete, the clearing and settlements. Because, the Islamic financial products need more advanced clearing and settlements process in a way of, settlement sukuk. Sukuk holders, need more intentions in a way of transfer, the dividends to the foreign exchange, for instance, etc. The Islamic financial provider also has responsibility to develop new products, hedging, future options. It's not a way of, imitate the current conventional products. They should, create their own product stream, whereas to be more advanced, more comply with the modern clearing and settlements and the regulatory framework.
And so what do you think what is the ESCA doing when it comes to facilitating a more proactive approach to regulations when it comes to Sukuk?
ESCA recently, in fact, taken the leads, in a way of develop more robust, clearing and settlements. We have, talking with IASCO, IFSP, OAV. Also we have, recently signed with the General Islamic Banking Foundations based in Bahrain and other institutions. Recently we have introduced Sukuk with Clever Chance, the legal firms, whereas too many, obstacles, too many hurdles being, settled down in a way of, give the chance for those guys who would like to list in our local markets. Also, ASCA recently built conventional and Islamic counterparty, liquidity enhancer, market maker, also trade on margin. So we are trying to introduce more Islamic counterparty products to give same opportunity for both who would like to have Islamic compliance products and those who would like to have the conventional one.
Thank you. So, Dr. Ibrahim Turhan, I'm going to rephrase this question again for you. Do you think the role of the government and its associated entities, including the regulators, exchanges, is to enable a level playing field for Islamic instruments, or is it to facilitate a more proactive and dynamic ecosystem for Islamic finance to thrive in?
Well, thank you. I think the second one, so facilitating the Islamic finance to develop, and the best way of facilitating the Islamic finance to develop is to create a level playing field. So what we are doing in Istanbul in order to facilitate the flourishing development of Islamic finance is we treat exactly in the same manner Islamic conventional, and because I think the issue is you know, in the philosophy, or if we put aside the philosophy, it's too much for an afternoon session, but let's say terminology. What is Islamic finance? And when we talk about Islamic finance, well, I learned from my studies that al-aslu fil ashya'i ibaha. So what is essential, what is the state of the nature for anything is to be allowed. So actually we don't have Islamic food, we don't have Islamic drink, we have halal food and halal drink. And what is halal? Everything that is not haram is halal. So I think we have to expand our vision. And when I look from this angle, I think we are a little bit too obsessed with the muraba kind of financing and sukuk kind of financing. And if I asked someone, what was the reason of the last financial crisis in the world? Well, the plain answer is excessive leverage. But we are still thinking about leveraged finance. But there is a whole domain of, allowed, halal financing, that is investment activities, investment banking, equity financing. And I'm afraid we do not spend enough time to think about it. So in Borsa Istanbul, and if you allow me, with reference to the previous panel, after we have fully demutualized and partially privatized, our efficiency has increased. We invested a lot in technology. We developed new products, because even if you are a monopoly within your jurisdiction, since our economy is an open economy, we are in competition with the rest of the world. So I think the best thing we can do for Islamic finance is to open all the gates and put Islamic finance in free competition with the conventional one, so that they will finally come to an understanding of differentiating themselves, not duplicating something that has already been carrying in a very efficient and effective way, but to bring innovation into this domain.
Yes, but to put that into context, we live in a system, and predominantly in the GCC and in Turkey and in European law systems, where it is very debt heavy. Mm-hmm. And that's the heritage that we've kind of landed ourselves into. And also, within that context, we also have a very young population who are primarily savers. So they haven't gotten into that. We don't have an institutional mass that's developed of investors, as we've heard in a lot of the earlier sessions. It is primarily retail investors. And the money that's flown onto Islamic banks has been retail investors who are looking to protect their cash. That's why we see this money going to sukuk, right, as a result. If, in the absence of any form of stimulus, that money is not going to go into the equity markets, should the governments, like in Malaysia, for instance, or elsewhere, start looking into stimulating the development of a more diverse capital markets that allows the development of institutional investors, that allows the development of equity instruments or small cap equities, that allow these Islamic investors to invest in them? Do you think the government has a role there?
Exactly, and now we are talking the same language. The government's role should be promoting institutional investors, improving the infrastructure, strengthening the equity financing rather than the conventional deposit holding institutions. But this is something which is very important. And why the government should promote this kind of activities? Simply because they are, in terms of the economic rationality, will provide more value added for the economy, better allocation of economic resources, and better risk management, and also more direct ability for, especially, and again with reference of the previous panel, small and medium-sized enterprises to have access over financing facilities. So this is something that every government should do.
But do you think that the governments are doing it? I'd like to ask someone who's independent of the governments. Khalid, you obviously rate a lot of these Islamic institutions. Do you think they're well supported by their regulatory environment and the government environment?
I think, I guess that's just a couple of broad points. I mean, you have the ideals of Islamic finance that's over here, which is equity-type investment principles. You have the state of the world as it exists today, which is debt, interest-based predominantly. And you look at the successes of Islamic finance are Islamic banking and Sukuk, both of which actually are more focused on replicating what is successful already. And so you have to think, even if you want to take that Sharia-sensitive investor, that, as you called him or her, from here to there, you almost have to start with products that they're familiar with. The person who puts his cash into an Islamic bank is expecting to get that cash back at the end of the year. They're not really ready to take investment type of risk. And so Islamic banking, I mean, the firm is a bit, the term is a bit of a contradiction.
That speaks to the demographic, right? It's across every market. We're seeing that these investors themselves are risk averse. It's because they have a smaller pool of capital. I mean, and the very rich ones obviously invest in, like institutional investors, right? Sorry, go ahead.
But so when you get to the Islamic institutions should be investment intermediation rather than financial intermediation. And this is where, you know, you see where Malaysia is actually going, where even that Sharia-sensitive investor at the moment, if he's looking across the spectrum of Islamic banks and Sukuk, they can't really differentiate, particularly between what is maybe closer to the Islamic ideal and what is maybe a bit further away. Now, in Malaysia, they're making it very clear that these deposits that they call investment accounts actually have to be called something different. So that the Sharia-sensitive investor who's comfortable with that idea of investment and investment risk goes for this type of product, and that Sharia investor who wants more of a deposit type can then choose the deposit type of structure. So at least on the outset, from a regulatory standpoint, they're making it very clear what the difference is. So if you are more sensitive, you will go towards that type of product. And I think because the value of Islamic finance goes beyond actually the religion, I think the underpinnings of equity type investment actually have so many lessons for the world today, as mentioned before. The crisis has been caused by too much leverage, too much debt-based consumption. When you have an equity-driven type of investment mentality, you're sensitive to risk, where your money is going. You should also be sharing those returns. But there needs to be more education, as mentioned before, more awareness, more top-down promotion of the sector. A level playing field, I agree in some senses, but if you just leave it to market forces, the global market is so huge, it's so debt-based, that I do think it actually needs more proactive support, as you've seen in Malaysia. And to take the Sukuk market, for example, why has it been so successful in Malaysia? On the supply side, there are financial incentives to issue a Sukuk. It's cheaper to do a Sukuk than it is a conventional bond. Now half the market, more than half the market is Sukuk-based. It's tax deductible. The fees and costs, all these benefits. So if you're a corporate, you're not thinking, do I want to be Islamic or non-Islamic? You're thinking, I want to raise finance. The best way to do it is Islamic. So that's on the Sukuk side, on the supply. On the demand side, you have Employees Pension Fund, $180 billion. You have the Haji Fund. On the demand side, they're creating from that side as well that they have to invest some allocation Islamically. When you get to the Gulf, sovereign wealth funds seem to be absent from this whole discussion. In terms of institutional investment, the mutual funds aren't that large. It's not a very fixed income-based culture. Insurance companies are quite small. They're also natural, takaful companies would be natural buyers of Sukuk. So both on the supply and the demand side, there are these things missing on both sides. Absolutely. And then also on the top. So there's so much that needs to be done, I think, for the market to move in that direction.
It's a very good framework. So, in that context, what I'd like to ask Dr. Obaid, and I'm sure you're going to have some other comments. Dubai has established and stated that it wants to be the capital of Islamic economy. Obviously, that's not a federal ambition, but it is still one of the big states of the United Arab Emirates. Do you think that the government is fully behind this? And are they going to make the same ecosystem changes that we're seeing in a place like Malaysia, where, as I said, the supply side, the demand side, and the government are all moving towards a strategic objective, as opposed to Dubai operating independently of the rest of the Federated Emirates?
Okay, I'm totally agree with gentlemen. You know, I think both approach will work. You know, the government has its own rules. You know, to develop the industry as a whole, in a way of let's take an example of Sukuk. Sukuk maybe it needs more to be developed on the regulatory level. For instance, creating care fields to benchmark the return. It's critical to develop the Sukuk industry in the financial markets. So both approach the governmental rules to be on the grounds in a way of paving the regulatory framework, provide more enhancements to the financial institutions such as central banks and other financial institutions involved in this industry. Also, to be market driven is ideal idea in a way of develop the products, bridge the gaps of between the conventional product which is in complete streams, and the Islamic counterparty, which is shortened on the Sukuk, Murabaha, Musharaka, the basic transactions. So I think both governments and the financial Islamic products provider has to work together to develop the industry. Return back to the Dubai visions of develop the center to be the center of Islamic finance. It's a pioneer idea. I think this is an example of government interference and push up the industry to be flourish, to be on the track, and I think this is a good idea. And the Dubai, it has the competency to be very successful in this way. It has the momentum of the industry. Too many financial markets working here. Too many exchange open the floor for the products to be traded. Also, the regulatory framework developed, well settled and robust to make this, the visions on the grounds and more successful.
But a lot of the things that Dubai wants to do impinge on or require as a prerequisite the cooperation of ESCA, the central bank, and the support and the proactive support of those entities to enable the laws, the regulatory infrastructure, for instance. Because in many instances, a lot of those don't exist for Islamic instruments as they do for the conventional market space. Do you feel that the government is going to get behind and support these in your capacity as ESCA? I know you can't speak for the central bank.
In the UAE, the support is already on the grounds. Okay. The floor is open, nothing to be, hurdles or to be stuck anywhere from the, legal aspects or from operational aspects. But the problem is, as the gentleman mentions, maybe the awareness is the lack of awareness among the market participants, such as funds. Funds maybe hesitate to deploy their funds in Islamic products because risk encounter, tax regime absence, trust regime absence, bankruptcy regime absence. So still there is some hesitations from doing more deployments of funds in this industry.
Before I finally finish off the bashing of the regulators and the governments, excuse me for that, Dr. Ibrahim, Khaled mentioned a very important point: supply, demand, and of course government interference or government support and enablement. You mentioned a level playing field. Do you think it stops there, or do you think it should actually be proactive ecosystem development?
Well, again, I think it's a problem of improving the ecosystem as a whole, as you described it. But this ecosystem should not necessarily be labeled Islamic. If you allow small and medium-sized enterprise to have access over financing abilities, if you allow companies, corporations to issue asset-backed securities more and more, if you allow investors to invest in through institutional funds to equity in investments, then of course this will already a support for the Islamic finance as well. And the thing is that
But surely there's some specific things that need to be addressed in the Islamic market too. So the lack we were discussing before, the lack of talent that is trained in Sharia compliant principles, it affects the kind of products that they develop, right? The Sharia governance, the standards and the rules, right? All this comes from the knowledge ecosystem, which if no one develops it, it just, hangs about. It doesn't really enhance as it does in Malaysia. Malaysia's got a university, it's got a Sharia research institute, it's got standards, it's got a central Sharia board. All of these help it. And they're very specific Sharia or Islamic finance ecosystem initiatives. Do you think that other countries should do that, or should they just say that, let's develop the ecosystem in its entirety?
I cannot speak on behalf of other countries, but I'm coming from a country where until, let's say 10 years ago, Islamic finance was under, additional suppression. So now we are really delighted to see that they can operate in a very, effective and efficient way, free, and the same rules apply to everybody. And this is already, for example, from 2% of the total financial assets brought the Islamic financial institutions to 5% of the financial assets. 5% is still low, but compared to the base, it's more than 2.5 folds increase. And of course, I totally agree in terms of investment awareness or education or better governance structure. But again and again, this has to be applied everywhere, not only peculiar to a segment of the financial activities, I guess.
I think too much of my questions have been directed to what the regulators and exchanges can do. I'd like to put it to the other elements of that ecosystem, which relate to the issuance side and the constraints there. One of the issues that we faced in the Islamic capital markets, particularly Sukuk, with the predominant side of it, is that the cost of issuance is very high, somewhere ranging between 50 to 200,000 at least, additional or marginal or incremental to the issuance of a conventional bond. This obviously, as you can imagine, raises the minimum amount of issuance, because obviously an issuer will look at this and say, what is the amount of money that I have to pay to raise an Sukuk, even if it's cheaper to issue it, right? And then they'll do a cost versus benefit analysis. And within that context, I wanted to ask the panelists that, do you think that we have come to a stage, and Khalid specific first, do you think we've come to a stage where we can move towards some form of standardization of templates that relate to Sukuk, so that the cost of issuance, the marginal cost of issuance is closer to zero as opposed to what it is now. Now, any issuer, whether it's Fly Dubai or it's the government of Turkey, whoever, they always consider this as the biggest disadvantage.
No, I think that's quite an important point. When I meet investors, unfortunately most of those investors are in London, would you believe, rather than here, who like 4 or 5 years ago were never asking about Sukuk, and now they are, looking at Sukuk, how does Moody's rate Sukuk, etc. And that's becoming much more frequent, not necessarily because they want to take Islamic exposure, because they want access to Gulf credit, they want access to Malaysian credit. But then they come to this Sharia structure, which is often very complex, very convoluted. Part of the structure is driven by the tension between, asset-backed, asset-based, form over substance, all these things. And that means they have to get approval from their compliance officer, from their investment officer, from their risk officer. So every structure is work for them. And they can't really leverage the work that they did, on the last transaction to the next one. So it definitely is a transaction friction. Even in the rating process, we have to sort of reanalyze quite often one structure to another because of that overhead. So we've seen this year.
Do you charge more for ratings for Islamic instruments?
I'm not on the commercial side.
But do you?
Strictly we have Chinese ones. You could ask my general manager there on the fees. But on the analytical side, it creates, it's much more work for us.
Yes.
And that creates a friction within the system. And what we saw this year, which I thought was very important, you had non-Islamic sovereigns entering the market. And then that pulls in more investors because they're looking for access to Hong Kong exposure, South Africa exposure. But then it's in the Sukuk form, so then they're forced to look at the Sukuk. But if they could, they would rather avoid it. So at the moment, around 95% plus, maybe 98% plus of issuance is the equivalent of a fixed income bond.
Security, yeah.
So there really isn't that much reason why there should be that much variation in legal documentation, in structure, in Sharia compliance, all these things. And it just creates an issue. So just to close off the point, so Malaysia, like one example, Malaysia has its central Sharia board. So then that helps harmonize within that country at least the Sharia elements of the decision. Lawyers may not be happy if things get standardized, but having a template may be defined at the regulatory level that says, okay, this is an ijara shukuk, this is musharaka, that everybody can use, means that that marginal cost should drop per transaction because everybody's using it. And more importantly, the investors, because it's the same as the last 5 that they looked at, number 6 is just whether do I want to invest, yes or no, not do I then have to analyze 200 pages of legal
Do you feel that when you analyze these instruments that come your way now, do you feel that they're moving towards convergence?
Definitely. I mean, compared to when I started, 7 or 8 years ago, where every structure was different, and you had to spend weeks drilling through. You do now see the 2-pool sort of wakala, mudaraba structures coming through. Ijara is much more prevalent, and I am seeing the capital markets transactions, the larger ones, depending almost on the law firm, to be honest, they because they like to reuse the documentation.
The templates, yeah.
But then from a different law firm, they have their own proprietary style, etc., which is really an overhead, a friction onto the instrument. So they're not going to want to standardize because then you reduce their value.
Fees, yeah.
So somebody with a bigger view on who wants the market to succeed as a whole has to bring this standardization.
Do you think that's a role of regulators like ESCA?
Absolutely. I have no doubt that it has to be a countrywide entity. If you leave it to individual banks, if you leave it to individual Sharia scholars, if you leave it to individual law firms, they all have their own interests to protect. But for the party that's responsible for the whole of the system, they don't care whether this company succeeds or this company succeeds. They want the country to succeed.
So I want to put my lawyer hat on before I go to Dr. Obaid.
I could
Sorry.
add, some points on the Sukuk. We have an experience with the Clever Chance, and we've been involved in the detailed process. The problem is how to build the structure, and what is the fees structure build up in a Sukuk operations.
Yes.
It really complicated. Starts with rating the Sukuk, and transfer the underlying assets
So before the
to SPV,
yeah.
then SPV structure, the Sukuk structure. That's really the intermediary fees. It's a huge in Sukuk. Taking into the considerations, the documentations, the Sharia guys who's tax, the whole things, and take part of the fees. Maybe 50%
So do you
of
think
the
you have a
fees
role
goes to
there?
the Sharia
Do you think you have a role there?
documentations. Sorry?
You think you have a role there as ESCA to say that, what, and I'll put my
No,
lawyer hat on.
as a regulator, we are not involved in this, process. But
Yeah.
the Sukuk, structure need to be, really it needs, standards. It needs more formats of, documentations.
But who do you think should do
Whereas
that?
everybody, can reach it and obtain it with, let's say reasonable fees, Yeah.
But doctor, who do you think should do that?
I think the
If it's not ESCA, who do you think in UAE?
Industry,
But then no one's doing it. That's the problem.
yeah.
I mean, and a lot of people think that it should be the regulator who's doing that. And the regulator, not the central bank, in this case is the securities
No,
regulator.
the regulator set, the holistic approach of, regulations,
Yes.
but not in details the documentations format and
Yeah.
the structure. The service provider submit the structure, regulator approve it if it is comply with the requirements.
Yeah.
But I think, the responsibility of, standardize these documents should be, either the service provider or anybody, professional body, establish as a partnership with, the IFI, the
IFI,
institutional, financial institutionals, or the, somebody else, as a,
So, I mean, we did the
we
same.
have already, one in Bahrain.
Yeah, Sibafi.
Yeah.
Yes.
So they are working well, and they are trying to do
And
something
IFM,
in
yes.
this way.
I guess the challenge is that those are done by independent bodies. Obviously, they're infrastructure institutions, but they have very little clout to be able to apply them. So, I mean, as you know, they have established a number of hedging products and interbank documentation. But it's really up to the regulators to say that, you know what, you have to use them, or else the market, and I'm going to put my lawyer hat on, I will have a lot of excuses to say, you know what, it's not right to use it because every sukuk is different and every issuer is different, and I'm going to make those arguments to back my very big fat six-figure bill that I'm going to charge you for this, because there are nuances. But as I was asking Khalid, and this is a very important question I asked him, are we seeing a convergence towards pretty straightforward similar structures? I mean, Yasser, do you feel that we are seeing that you can generally classify, for instance, an underlying asset-based ijara sukuk can be standardized? I mean, we did this ourselves, right? Thomson Reuters and yourselves.
Yes,
Yeah.
we did actually. That was a good exercise, basically. And I believe it can be done, of course. We actually have done it with Thomson Reuters. And, but there is also, beside the documents standardization, as Dr. Abeid mentioned, regarding the scholars, Sharia scholars, and their fees and involvement in developing a scope. We call that Sharia supervisory function, and we believe there is also a way of lowering the cost of any Sharia compliant product, not only sukuk, by institutionalizing this work. A simple example, if a very simple murabaha product is being proposed to the Sharia board of a certain bank, if another bank wants to do the same thing, they will develop the same document and represent it to their Sharia board as well. So time is wasted, and efforts and cost just to do the same thing over and over again. Where if it was standardized, and also the Sharia work of supervision is also standardized, this we believe will minimize the cost, and this is basically out of our experience. We have done that on standardizing the documents and also the work of the Sharia. What is the requirement of Sharia supervisory or supervision in that particular product or service? It can be standardized. You can have an audit program that is good for any murabaha transaction or any murabaha product.
Do you think it should be driven by market players like yourselves and people who stand to benefit, or should it be driven by regulators or other entities or infrastructure institutions?
I think both. Why not? I mean, regulators' role is very important. I mean, important in terms of regulating entities like us. And from the other side is also trying to improve this function. I mean, since the start of Islamic banking and finance, let's say 40 years ago, everybody wanted to throw anything related to Sharia compliance on the Sharia scholars, and that is wrong, because this is business, and it should be treated as business. You need to create manuals, processes. You need to manage your risk. You need to do all these things that you do for any other line of business. But when it comes to Sharia, people stop and say, no, go to the Sharia scholars. Okay, I go to the Sharia scholars, of course, to get their opinions and update them of what's happening. But when you take it back to the business, you need to know what you should do from a business point of view.
Dr. Ibrahim, you had something to say?
Well, again, I think the terminology matters, because when we say that regulators should play a role in the standardization of the Sharia compliant products, it means that we are asking them to make it compulsory to follow certain procedures, which is not good. This is not their role, actually. It's like to expect someone making a surgery operation with a sword, because regulators, in most of the time, at least in my country, they carry swords, and you cannot make sensitive surgery operations with a sword. Rather, I think it should be as industry standard. We should encourage market participants to come together and to have a common understanding and templates maybe. And in order to encourage them, for example, what we can do, I'm talking on behalf of the Borsa Istanbul. For example, I let only standardized products to get listed in my markets, so that have access over market liquidity.
Absolutely.
And it makes sense, because otherwise it would be not possible, to list everything. It would be a complete mess. So these kinds of maybe motivations should play a more efficient role, in my opinion.
So it is a little bit of a conflicting view, because you're not fully supporting it, but you are saying that you do want some form of standardization or standardized products to come into your exchange.
Yeah.
I want to also put this question and another one to the audience, to see, whoever's awake still, to see whether or not what they think about these issues. So I'd like to ask question 2 and 3, if they can put this question up. Sorry, the next question? Yes. So this is going into something that everyone, the topic of conversation that we had in the initial stages was, and I'd like to know what the audience thinks of these issues. Seems that most think that regulatory environment is insufficient, and to a certain extent, of course, lack of awareness. Can we also ask this question after this, please? This goes down to the perennial question that we were trying to get an answer for. Should regulators be involved in, for instance, standardized documentation? Please. Please feel free to answer this question, because we'd like to get a view of what the market thinks should be the role of regulators and authorities.
Your shadow on me.
Surely it has, a certain level.
So, the view is specific laws and regulations for Islamic capital markets is very important, along with Sharia governance, and then documentation doesn't seem to be an important factor, which goes to your statement before. But it seems that Sharia governance seems to be an important priority. We know that specific laws and regulations is something that obviously is, in your view, already being taking place. In terms of governance, what do you feel? And Dr. Ibrahim, I know your position, but again, I want to hear it again in the context of Sharia governance. Because in the context of Islamic instruments, you need to have a layer of Sharia governance that is distinct from other forms of corporate governance. Yet, in the UAE, there isn't very clear rules when it comes to even the central bank or the securities market as to what Sharia rules or Sharia governance structures need to be in place for Sharia compliant instruments. What do you think is the approach in this context, given what?
Yeah, on the aspect of Sharia governance, currently the situation, we don't have centralized Sharia board working at the level of, ASCA or central bank. And that's of, lack of the matter, I think we are in need of, formate a robust Sharia committee at the level of central banks and ASCA at least, to oversee, the matter which is arise recently, develop, the Islamic capital markets. Some kind of sukuk needs to be, standardized, harmonize, the current regulatory regime with the best international Islamic standards, such as OAV standards and IFSP governance standards as well. So yes, it's critical to have a central one, but it's not necessarily. We can live without a central committee, but for sure, I think we need to establish a committee or accredit the committees who's working at the Islamic financial institutions, follow standards, Sharia, let's say standards or Sharia fatwas, and minimize the
Divergence.
The way of arbitrage, the Sharia fatwas, but the consumer in a bad situation.
Yes.
What to choose and what to avoid,
Yes.
and that's bad for the regulator, for the company who's would like to promote their products.
So you think that the regulators should start moving towards having some form of Sharia governance in place?
Yeah, I think this is the time, because we have already the vision of Dubai and as a center of Islamic, finance. We have, the central bank's movements. He, recently introduced too many products to manage the liquidity among the Islamic banks operating in the UAE. And, these endeavors and, initiatives need a central committee to work with central bank and, ASCA in a way of, develop the markets. Yeah.
Thank you. So on to another topic before we open the floor to questions, is the topic of Saudi Arabia and National Commercial Bank's IPO. It's been in the news. It was heavily oversubscribed by about 10 times, and was one of the largest IPOs in the world in this year. However, there was a little bit of a glitch or an issue with that. The Sharia scholars, as you know, the context was that the Sharia scholars in Saudi Arabia came out against it, saying that it's not compliant to invest in this IPO because it's not a Sharia compliant stock. And as a result, the National Commercial Bank promised that we are going to convert our operations in 5 years' time to be fully Sharia compliant, and our Sharia board has blessed this approach. And already our assets, 67% of which is already Sharia compliant. Now, does that mean that we're going to move to a point where more of the market will start having these non-pecuniary incentives to do Sharia compliant activities? And will we see more corporates and institutions who previously have not been necessarily Sharia sensitive have to be Sharia sensitive because they don't want to face this reputational risk or operational risk. Do you see that that's going to happen? Yasser, I know you know a lot of the Saudi market. Or do you think that this is a momentary blip and people will forget about it and it's not important in the context of capital raising?
Okay, from that point of view, no. This is you only heard about it because of the NCB issue, but before that, we have done a lot of IPOs where we were initially approached by the arranger, the investment firm, that bank, or that is arranging or managing the IPO. And in order for them to complete their file, to go for the roadshow, they wanted to have Sharia approval on the IPO. And our role was to qualify the company to be Sharia compliant. I mean, and if there are any issues that need to be resolved, we give them the solution, and when they resolve it, we certify the company, and it goes in with other documents in their file. So. We've done this for different IPOs in Saudi Arabia, but the famous one is actually NCB, because it took a lot of debate between some scholars, well-known scholars, who came out and said that NCB IPO is not compliant. For a while, then there was a response of the Sharia board of NCB itself, who said, like you mentioned, that 2/3 of the bank assets are Sharia compliant, and the rest will be converted within a time limit of five years. And they don't see an issue. I mean, if I remember right, they don't see an issue in investing in that bank. Now, a lot of debates, and we have received a lot of questions, although we are not involved in NCB IPO, but we have received from our clients and from other involved parties who wanted to know about the issue. So for us, this is going back to the first point I mentioned, which is client education and client attitude. I mean, even the things that were said by the scholars, they were transformed to different interpretations, and maybe some people added more information from their minds. But this is not what we like to see in the market. And surely there was a big confusion between investors.
Do you think that now any issuance that's bond or a bond or an equity issuance, do they think that there's going to be a pressure on the corporates to issue in a Sharia compliant format, or has nothing changed really?
No, I think as I mentioned, it is there already. I mean,
that pressure is there already.
Yeah. Pressure is already there, but only the famous one was NCB. But the pressure is there, and I think after this incident, also more investors will be, or more companies will be interested in having their company to be Sharia compliant. Now, there was some cases a long time ago where, for the same IPO, we had two contradicting opinions on the same financial statements, on the same BPMs and everything. They are saying that this is, one scholar is saying it's compliant, and the other was saying it's not compliant. And to resolve the issue, companies come to try to resolve this before they go for IPO, just to try to clear everything, so we don't go and be exposed to different interpretation. Let's fix it and have our company compliant, and then we go for the IPO.
So business must be booming for you in Saudi Arabia next year.
Inshallah. Inshallah.
I'd like to take last few questions, if there's any, and then conclude. Sorry, there's one there, and just one from Your Excellency in front.
Before I take up the question, I would like to draw an analogy that if you take an incandescent bulb and if you take a laser beam of the same power, the light from the laser beam reaches far, but not from the incandescent bulb. The point that I'm making is, if the efforts are directed in the same direction, then they will travel much faster. So why can't we replicate whatever has already been fruitful in other countries, for example in Malaysia, and have a central committee at the government level, and that takes things further. Populate them with knowledgeable people who knows conventional as well as Islamic financial industry, and they can engage both the scholar, all the stakeholders. They can engage the Sharia scholars, they can engage the industry, they can engage the investors, and they could be the driving force to take it up further.
I hate to put you in the hot seat again, Dr. Ubaid. This is, I think, directed towards you a little bit. And of course, Dr. Ibrahim.
As I've mentioned, before, it's equal approach is result to the same result, or resulted to the same result, because if you deploy a central committee, it gives you advantage of harmonizing the Sharia fatwas, but it does not affect positively in a way of doubling the developments of financial Islamic financial products. Because the developments of financial products, it's lying on the responsibility of the institutions itself. So I think both approaches working fine, either to have a centralized Sharia committee, or the committee who's working with the specific or particular institutions is more capable to issue right fatwas.
I think there's a demonstration or visibility effect that a centralized Sharia committee does for a country. It signals to the market that there's certainty in terms of arbitration and, I guess, final determination of Sharia. More so than even the uniformity. In Malaysia, as we know now, all of the banks have Sharia boards, but then there's this appearance that there's a Sharia board that does everything. Not necessarily the case, they don't. But even that signals to the market that this place has got a little bit more certainty than other places. And we know, places like Saudi Arabia, it's considered, it's like the Wild West when it comes to Sharia compliance in some contexts. In the GCC in many contexts. Unless you have this very top-down approach. Do you think that, Dr. Ibrahim, you had some observations about this?
Well, I think there is no need to reinvent the wheel. There is an already recognized and well-established arbitration mechanism. When you have two different views, you choose, you bring one from each side, and they combine, select someone else. So the decision is taken by those true scholars, and it is, I think, a well-known solution arbitration mechanism. I don't think that the government or a regulator has anything to say about Sharia compliance. This is not the regulator's role. The regulator's role, in my opinion, is to make sure that in terms of risk taking, in terms of best practice compliance, in terms of governance, everything is in the right place.
But this is a risk, and a lot of the marketplace will tell you that this is one of the biggest risks that they face when they go into Sharia compliant investments. Because if you lose the customer's confidence, it's a huge operational risk for you. You may have a flight.
This is a risk for the financial institution, not the system.
Yes.
What regulators have to concentrate is the systemic aspect of the risk. They should be really indifferent between all market participants, and their concern has to be a systemic risks, not individual or micro level risks that is associated with one peculiar financial institution.
So if I understand from your perspective, your final determination is that it should be a level playing field, not any more supportive environment as we have in places like Malaysia.
No, the support should be for
everyone.
Institutional investment, The support should be for equity-like investment. The support should be for SMEs access on financing. And no additional, for example, cost or no less liquidity for any kind of market segment. If, for example, Islamic finance is, facing a difficulty in terms of having the same level of the liquidity as compared to the conventional one, then of course there may be a role to play, again to bring to the same level. But this
Dr.
should be.
Abbas.
I think the point is, referring to the today early morning sessions of the, Egyptian capital markets chairmen. The approach they follow is absolutely fantastic. He said, we are not concerned about, the centralized committee. We're concerned about those individuals who, provide, the opinions. He must be, competent, qualified enough, has the experience required to analyze the structure from the financial and economics point of view and issue his opinions. This is the right way of how the regulator
Yeah.
will involve.
So this is what you call a
Not-
prudential
yeah.
systemic approach.
Yeah,
right?
because I'm not generalize the opinion, but most of the financial institutions, they would like to have the rubber stamp of Sharia, and that's absolutely is not a good, a correct way of how to develop the Islamic financial institution industry.
So they can go
Yeah.
to anyone they want to. And
Yeah.
as you mentioned, they
Yeah.
can do arbitrage
Yeah.
and get the scholars that
Yeah.
are convenient
So
for
the
them.
regulator, it could, register or license, the individuals of Sharia,
Or
who are not
institute.
involved in their opinion and, decide which the product is, compliance with Sharia or not.
Like independent auditors, I mean,
Yeah.
the same.
Yeah.
The regulator should, recognize the authority of an independent auditor to, publish a list for the authorized independent auditors. This same can be applied for this as well.
Exactly.
Sure. Your Excellency, you had a question? Just on the front here, please. No, just coming to you. We'll just take this last question and then we'll conclude.
Yes, my question specifically to Dr. Turhan. If I understood you right, you mentioned that 10 years ago, the Islamic finance in Turkey was not utilized in
Until 10 years ago, yes. 10 years ago.
10 years ago.
Yeah.
Can you tell us how many times the use of the Islamic finance increased since then till now, and why is the increase?
Well, in proportional, in relative terms, as I said, the Islamic finance was constituting 2% of the financial industry, or in terms of the asset size. Now it is 5%. So it means that in relative terms, there is 2.5 times increase. And this is basically because, the laws and regulatory framework brought the Islamic finance to the same level of the conventional finance. So no different treatment, no restriction, no additional taxation, no unfavorable or uncooperative approach for the Islamic finance.
If I may, just 2.5% increase in 10 years' time in a big economy like in Turkey, especially the growth, it's not that big increase.
It is big. It is big because for during the same period of time, the total size of the financial service industry, again compared to the country's GDP, has increased from 50% to 100%. So the whole system has increased. The denominator has increased because our GDP has increased by almost more than threefold. So altogether, and within this, Islamic finance has increased its proportion. So not only captured the same momentum, but they were in front of the other components of the sector. So I think it's a remarkable success.
If there's nothing else from the audience, I'd like to thank the distinguished panelists for giving us your contributions and your very open views. We really appreciate it, and thank you very much for attending the session till this late hour.
We would like to thank all our speakers today. A long day rich with comments from decision makers and leaders and views from the industry experts has come to an end, but this forum has a lot for all of us.